Let's bring in senior markets correspondent Kevin Green right away to help set up the action today. KG, can one holiday shortened week turn everything around this month? I'm kidding. I know 1 week can't change everything. But I'm curious to know, kind of how you encapsulate where things stand now.
Yeah, you never know what's going to happen in a week like this. Obviously, we will probably see a lack of liquidity in the market, just like we have seen over the last couple of weeks, but we usually do see some bullish activity. Now, is that going to be the case? Who knows? I think the news flow is going to be very critical, especially when it comes to the AI trade, as well as what's going on over in Europe. Right now, we are seeing a meeting between the U.S. and European partners in order to try to come up with another trade deal, if you will, or maybe improve the one that we currently have, or that framework that we currently have in place. And we also have a lot of other geopolitical risk events that are out there. But if you're looking at the technical setup, last week we pretty much tested that 20-week moving average on the S&P 500. If you go back in the last 5 years or so, we usually don't test the 100 period moving average or the 20-week moving average and then fail. Usually we do see a counter rally the next week. And so if that's going to hold up this time around, you would expect maybe a little bit of a bounce, at least early on in this week, in order for us to try to retrace, maybe test that 50-day moving average, maybe test that 20-day moving average. But overall, obviously, we've seen a lot of selling taking place here. I think that it does set up for a little bit of a bullish tilt this week, just given the dynamics that we have, not only from a technical standpoint, but also from a mechanical standpoint with the market and seasonality.
Okay, so you say the news flow is critical. What are you watching for this week ahead, especially given that it's a holiday shortened week and volume may be thinner?
Yeah, you still want to see the themes of within artificial intelligence as far as these deals being done, or maybe even some of the progress from some of these companies really starting to hit the tape. I think that's another reason why you are seeing Google, Gemini, and Alphabet, if you will, right? Google and updating that Gemini platform, that AI platform, now is seeing a surge in activity here. And so you are seeing some optimism when it comes to that name. Maybe it's taking away a little bit from OpenAI just in general, but if we continue to see some of these deals that make sense and doesn't seem like they're all circular in nature, I think that's going to be a positive. You're also looking for other sectors to really try to outperform this week as well. Obviously, it makes it easier for the S&P 500 to move with communication services, technology, and even financials. But this week, we might see a lot of the smaller sectors actually catching a bid. There's a lot of institutional investors that still are behind their benchmark when you're looking at the index itself. And so they might look at smaller sectors like staples, materials, or even healthcare to try to make up some of that underperformance this week. And I think the healthcare space is probably the one to really be focusing on, especially if some of the chatter that we're seeing or are reading here that we might see a potential extension on the ACA subsidies over the next 2 years here, that could actually drive a pretty aggressive rally for the healthcare stocks, because the healthcare stocks themselves, the pharmaceutical names have been doing pretty well, biopharma is doing pretty well, but the health insurers have not really been performing in that same type of manner. So is there a catch-up trade that is there that could really thrust the healthcare space to the upside this week? I think that could also be another sector that a lot of institutions look forward to.
So we may need some help from the other 493 names, but let's talk about one of the 7, Alphabet, Google. It's got a little bit of a, it has more wind at its back this morning. What are you watching here?
Yeah, once again, this is a company that rolled out that Gemini 3 update, if you will, and they are seeing a really significant uptick when it comes to traffic. I mean, that new model is now really superb when it comes to building out websites and also other front-end capabilities, not only for web, but also when you're just programming in general. There's probably some other areas within that model that it really does outperform, especially when you're looking at some of the others within this space. In fact, obviously, there's been this report that Sam Altman sent an internal memo stating that they might actually see a little bit of a deceleration when it comes to revenue growth for the company in 2026. And their CFO also made mention that they are seeing maybe a little bit of a pullback, once again, a deceleration when it comes to activity. This is where a lot of the major companies or the mega cap tech stocks can really outshine, let's say, an OpenAI. It's not because of the technology in general, but they are able to reduce costs and really squeeze margins and put a little bit more pressure on a company like OpenAI. If that theme continues, is that going to be negative for the overall artificial intelligence theme? I don't think so. That probably would actually push capital to those names like Alphabet or even to a Microsoft as well. Once again, because they're publicly traded. So I think that narrative this week is going to be very key. It looks like the Alphabet also signed a deal with NATO for a cloud computing contract as well, a couple of $1 million deal there that was announced earlier this morning. So that could also be providing a little bit of fuel for that name.
Okay, saw that headline. Let's talk a little bit about the price action with some crypto companies, crypto-facing companies. You've got Strategy moving a little bit higher this morning. You've got Coinbase, Bullish also on the plus side this morning. What are you watching when it comes to those companies and, say, the price action in Bitcoin?
Yeah, so the price action in Bitcoin, you want to see it really hold this 82,000 to 80,000 level. If not, you're seeing another, let's say, $8,000, $9,000 to the downside as your next major area of support when it comes to Bitcoin. For these treasury names, the strategies or MicroStrategy, or MicroStrategy, what have you, they changed their name. You are seeing that premium compared to net asset value being taken out of these companies here. Now, some of them are actually trading either at parity or even at a little bit of a discount. If you look at BM&R, that's another one from Tom Lee's fund that looks like it's now starting to trade at a little bit of a discount. That might actually then kind of right-size these positions here. I think there's probably still a lot of froth. When you're looking at Bitcoin as a high beta asset, it's a liquidity pool as well. So when people need capital, they're going to probably sell out of some of the riskier assets. And that's what we've seen in the past. It's what we are seeing right now. And you are seeing that outflow taking place within the ETFs as well. IBIT had a significant amount of outflows last week. Actually, I think it was the second largest amount of outflows for IBIT since inception. So there's a lot that's actually taking place in this particular market. At some point in time, though, Diane, I'm a very big believer that the correlation between cryptocurrencies and the equity market will eventually break at some point in time.
Okay, I was curious to know that because, it seems like there has been this close parallel between them. What do you think is it that makes that break?
Just the deleveraging and the de-risking. So usually when you're looking at an institution that's putting capital to work, they might have exposure to the cryptocurrency market, and they might utilize some of those strategies in order to fund some of their equity positions. So when we talk about deleveraging, that just means that you're trying to sell assets, try to raise capital, and sometimes that raising of capital, you also have to sell other assets that might be tied within that portfolio if they have it weighted in a certain manner. But at some point in time, just like with every single other market that is out there, you do get to a floor where that deleveraging kind of is minimized, and we start seeing maybe a reallocation of capital. And so hopefully we're closer to the end when it comes to that, especially when you're looking at crypto and the equities, and investors might find opportunities. I mean, if you kind of look at the 70,000 level for Bitcoin, technically speaking, Diane, that's when it gets a little bit attractive from a technical standpoint. So there also might be a floor when it comes to cryptocurrencies just in general as well. I'm not sure if we're there yet, though.
Okay, let's talk your levels on the S&P 500 today. What are you looking for to the upside and downside?
Yeah, so to the upside, you're looking at 6,700. To the downside, 5,250. We still have a 23 VIX, so that's implying a 1.4% move to the upside or downside. What we need today, Diane, is a green day and hopefully closing very close to the highs on large volume, showing strength. What we do not want to see is an intraday reversal and us closing lower. I think that would give the bears enough confidence to knock this market down even further.
Okay, 6,700 to the upside, and just confirming 6,250 potentially to the downside.
I'm sorry, 6,520 to the downside.
6,520. Okay. 6520, got it. All right, thank you, KG. That is Kevin Green, our senior markets correspondent. I appreciate that.